Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Custom Truck One Source Inc. quarterly report. Custom Truck One Source Inc. offers a diverse range of services and products to various industries across the United States and Canada. The company's primary businesses include Equipment Rental Solutions, ERS, Specialty Equipment Rental, including aerial lifts, cranes, service trucks, and machinery truck and equipment sales, TES, New Equipment Sales for End Markets, with customization options, Aftermarket Parts and Services, APS, Truck and Equipment Maintenance, Repair Services, Specialized Tool Rentals, and Sale of Aftermarket Parts. These services cater to industries such as electric utilities, telecommunications, rail, forestry, waste management, and infrastructure-related sectors. Custom Truck One Source, Inc. CTOS, stock price has skyrocketed by over 85% in the past year, driven by several key factors. The company's strong financial performance, including a 21% year-over-year increase in second quarter revenue and a 20% rise in adjusted EBITDA, has been a major contributor to its success. Additionally, growth in key segments such as truck and equipment sales and transmission and distribution markets has also played a significant role. The company's ability to capitalize on increased demand for power, driven by data center and electrification investments, as well as ongoing utility grid upgrades, has also contributed to its growth. Furthermore, the unveiling of advanced equipment, including an all-electric bucket truck, signals product innovation aligned with infrastructure spending catalysts and efforts to improve margins. The company's strategic expansion, including the opening of a new location in Orlando, Florida, has also helped to address growing demand. Analysts have reacted positively to the company's performance, with some raising price targets due to healthy indicators. Overall, Custom Truck One Source's strong financial performance, growth in key segments, and product innovation have all contributed to its significant stock price increase over the past year. The primary drivers of revenue growth or decline can be summarized into three key areas. On the growth side, rental revenue and equipment sales are driving the increase in revenue. Rental revenue has seen a 9-month growth rate of 6.7% due to higher fleet utilization and increased average OEC on rent. Equipment sales have also grown by 5.1%, driven by an increase in rental equipment, sales volume, and demand in the utility market. On the decline side, parts and services revenue is experiencing a decline, with a 9-month decrease rate of -3%. This is largely due to a decrease in deposits collected for orders placed for equipment and rentals. However, it's worth noting that operating income from parts sales has actually increased by 41.6% compared to the previous year. Overall, these drivers suggest that revenue growth is being driven by strong demand for rental equipment and services, while revenue decline is being driven by a decrease in parts and services revenue. The company is indeed generating positive operating cash flow. According to the financial summary, the net cash flow from operating activities was $262,804 in 2025 and $39,934 in 2024. This indicates a significant increase in operating cash flow over the past year, with a substantial jump of $222,870 from 2024 to 2025. The company's debt level has increased significantly over the past year. According to the financial summary, long-term debt rose by 7% from December 31, 2024 to September 30, 2025, while total debt outstanding increased from $1,547,650 to $1,666,396. This increase in debt is reflected in the company's interest expenses, which decreased slightly for the 9 months ended September 30, 2025, from $124,191 in 2024 to $119,364. However, it's worth noting that there are conflicting reports on interest expenses across different pages, with one page indicating an 8% increase for the year 2025. Management is optimistic about the company's outlook, citing strong new equipment sales and higher rental revenue as key contributors to a decrease in net loss. The company expects future developments to be driven by current expectations, plans, and assumptions, with a focus on executing strategic initiatives such as acquisitions and divestitures. Management also believes that the company's liquidity sources and operating cash flows are sufficient to address its operating, debt service, and capital requirements. Key areas of focus for management include executing strategic initiatives, managing government spending, and macroeconomic conditions, maintaining a strong rental business through Equipment Rental Solutions segment overall. Management is confident in the company's ability to navigate current challenges and achieve future growth. The company has a history of buying back its own shares through various stock repurchase programs. In 2022, the company authorized a program to buy back up to $30 million worth of shares, which was later increased by $25 million in September and another $25 million in March 2024. This brings the total authorization to $55 million. Furthermore, on January 30, 2025, the company purchased 8,143,635 shares for $32.6 million through its Energy Capital Partners stock repurchase program. Concerns about inventory buildup exist, but supply chain disruption not indicated. The financial summary reveals concerns about inventory buildup. The data shows an increase in inventories by $15,753 in 2025 and a decrease by $213,468 in 2024. Additionally, whole goods inventory levels remained relatively stable at $910,101 as of September 30, 2025, compared to $913,571 as of December 31, 2024. However, the summary does not indicate any significant supply chain disruption issues. The increase in ending OEC, 8.6% and 14.2%, could be indicative of inventory buildup or increased production levels, but it is not a clear indication of supply chain disruption. That concludes the financial summary for Custom Truck One Source Inc. Feel free to comment below, and I will be happy to answer them when possible.